Liquidity of short-term assets. Related debt-paying ability. First problem is all about day sales in receivables. Auto Deals, a car dealership in Manila, is concerned about its cash flow. The general manager wants to assess how quickly the dealership is collecting payments from customers who purchase vehicles on credit. She asked the finance manager to calculate the day sales in receivables for the past year. Given the information, gross receivables is equals to 8,500,000, and for the net sales, it is 60 million. And for the number of days in the period, it is 365. For the solution, we apply the formula day sales in receivables is equals to gross receivables divided by net sales divided by 365. So, 60 million divided by 365 is equal to 164,383.56. And then, 8,500,000 is divided to 164,383.56. We get the answer of 51.71. Auto Deals day sales in receivables of 51.71 days means it takes an average of 51.71 days to collect payment from customers after a vehicle is sold on credit. This is relatively healthy, indicating that the dealership is generally collecting its receivables efficiently. Next problem is about accounts receivable turnover. BDO, a prominent banking and financial services company in the Philippines, wants to evaluate its efficiency in collecting outstanding credit payments from its clients. The CFO has tasked the finance team with calculating the accounts receivable turnover ratio for the past quarter to assess the company's performance in this area. With a total of 127,500,000 of average gross receivables and a total of 108 million for net sales. We have the solution, and we're going to apply the accounts receivable turnover formula, which is net sales divided by average gross receivables is equal to 108 million divided by 12,750,000. We get the answer of 8.47. BDO's accounts receivable turnover of 8.47 indicates that the company collects its average account receivable balance approximately 8.47 times during the quarter. This means it takes BDO an average of about 43 days. I got the answer of 43 days, 365 days divided by 8.47 to collect payments from its customers. For our next problem, it is accounts receivables turnover in days. The problem is Vivian, a talent painter based on Quezon City, has been experiencing cash flow challenges. She often sells her artwork on credit to galleries and collectors, leading to delayed payments. To better manage her finances, she decides to calculate her accounts receivable turnover in days for the past year. Given the information, average gross receivables is equals to 175,000. And for her net sales, it is 600,000. For the number of period, it is 365. And for the solution, we're going to apply the solution for the accounts receivable turnover index, which is average gross receivables divided by net sales divided by 365 days. And so, 600,000 divided by 365 is equals to 1,643.84. Applying the formula, 175,000, which is the average gross receivables, divided by the net sales divided by 365, which is 1,643.84, we get the answers 106.4. Vivian's accounts receivable turnover in days of 106.4 means it takes her an average of 106.4 days to collect payment from her clients after selling her artwork on credit. This relatively long collection period might be contributing to her cash flow issues. For our fourth problem, which is about first in, first out. Our problem is Market Fresh, a bustling market in Quezon City, specializes in fresh produce amidst rising inflation. The manager, Luisa, wants to accurately track the cost of goods sold and remaining inventory value of fruits and vegetables. She decides to employ the FIFO method to account for inventory flow during the past month. And we have the chart here, which is date June 1, purchase quantity is 100, and purchase price is 50 per piece, and the total is 5,000. And for the June 10, we have 150. For the purchase price, we have 55, and for the total cost, it is 8,250. And for the June 20, we have 200 pieces, and purchase price of it is 60, and the total cost is 12,000. For the month, June 30 sales is 220 kilograms of fruits and vegetables. For our solution, we first identify the order of inventory purchases. FIFO indicates selling the oldest item first. To calculate the cost of goods sold from the sell, we sell 100 kilogram from June 1's purchase, which is the 5,000. Sell 120 from the June 10th purchase, which is 6,600. And then, for the total cost of goods sold, we just added 5,000 plus 6,600, which is 11,600. I also added the calculate the value of the remaining inventory, pero hindi po naisama. Pero I'm just gonna say it na lang po. So, we have 30 kilograms left from the June 10th purchase. Pricing 30 kilograms times 55 is equal to 1,650. And then for the June 20, we have remaining of 200 kilograms. 200 times 60 is equals to 12,000, and then we're going to add it. The total remaining inventory value is 1,650 plus 12,000 is equals to 13,650. The market first incurred 11,600 in cost to sell 250 kilograms of produce in June using FIFO method. And for the remaining inventory value, the market has 13,650 worth of fruits and vegetables remaining in stock, valued using FIFO method. And for our last problem, we have last in, first out, LIFO method. Rice Mountain, a rice store in Manila, is facing rising prices and needs to manage its inventory costs effectively. The store manager, Maria, decides to use the LIFO method, which is last in, first out method, to value its inventory for the rice for the current month. We have the given information. Rice purchases. For the January 10th, we have 100 sacks at 2,000 per sacks. And for the February 25, we have 50 sacks at 2,200 pesos per sack. For the solution, we're just going to apply the LIFO method. We're going to assume that the most recent purchased rice is sold first. So for the cost of goods sold for the 120 sacks sold is 75 sacks at 2,500, which is equals to 187,500. And 45 sacks at 2,200 is equals to 99,000. And we're just going to add it, which is 187,500 plus 99,000 is equals to 286,500. I'm just going to calculate the ending inventory. We have 35 sacks remaining are valued at the earliest purchase price of 2,000 each. 35 sacks times 2,000 is equals to 70,000.